The state of Africa's industries, trade, and the financial markets have been in sharp focus over the last few days in the city of London. It's an annual gathering of the big names in the world of business and finance and investments, talking about how to do business in Africa, invest in the continent, and get the continent to be part of the global trade, even as the continent puts together its own continental free trade zone, which formally takes off on June the 1st. So let's talk to one of the panelists and member of the program just ending London, live from our London studios, Andrew Nevin, who is a partner and chief economist at PwC Nigeria, is live to us. Good morning, Nevin. It's good to see you at the other side of the Atlantic.
Good morning, Mohsen. I thought I was going to be interviewed by someone in London, but here I am being interviewed by you again. But it's always great to talk to you.
Andrew, you thought someone's going to do it. No, I'm here. I'm here. This is as good as it gets between you and I. But you're going to have that opportunity some other time when you're in London with some of our team out of there, Juliana and Simon and the rest of them. I hope they're getting you a cup of coffee and get you set for this interview.
Treated me very well. I'm really happy to be in your studio here. I mean, it's great to see Nigerian media like channels kind of going out globally. Fantastic.
Thank you. Thank you. I appreciate it. So it's been a very busy 2 days or so for you in the city of London with this annual debate. What are the key takeaway points, broadly speaking, for you for over the last 2 days session?
Well, I think like usual with these things, there's some glass half empty, glass half full types of issues. I think one thing that really impressed me, so the president of Togo gave the sort of keynote speech, and over the last decade that I've lived in Nigeria, you've seen a real change in many parts of the continent. We really understand that you need the private sector development. And the president of Togo stood up and he said Togo is open for business, and he gave all the reasons why a country you may not think of as a center of industrial manufacturing, commercial activity, why people should come and invest. He made a fantastic impression on all the investors. And I think that's just a sign of a big shift in the continent in this thinking about how we develop. At the same time, a lot of the investors sort of sent the signal that said, look, we get that there's lots of opportunity in Africa, but we're still a bit reluctant because of the Africa factor, in fact. So they might like an individual company, but they're just concerned about the stability across Africa. And of course, we continue to be weighed down. I mean, your report a little earlier talked about it. We continue to be weighed down in sub-Saharan Africa by the weakness in the Nigerian and the South African economies. So while we have lots of bright spots around the continent, we have the two biggest economies in sub-Saharan Africa continuing to underperform.
Okay, so let's get a bit down to some specifics here, Nevin. The global economy is under some form of fire as we speak. So doing business and investing in Africa in a very cloudy and uncertain atmosphere, how very easy or difficult, what situation does Africa found itself at the moment when you have the big fight on trade, you have the sluggish economic performance among the big names, and then there is all about the need to get Africa to be part of the global economic game?
Well, there's nothing we can do about the global economy, and I think people that expect the robust global economy or high oil prices to drive our development are misguided. The only people who can control Africa's economic development are Africans. So we need to plow ahead and say, look, there's lots of capital in the world, very low yields, they want a place to invest. So to the extent that we make it better to invest in Africa, we're going to get that capital. Now, Isoko Insights have identified 2,700 companies in sub-Saharan Africa, outside of South Africa, but sub-Saharan Africa, between $50 and $500 million revenue, private companies. And that's a real engine and base we have. Those companies need to develop. They need to get outside investment, initially private equity type investment, and we need to bring more of them to the market and just create this engine of economic development through the capital markets. The other part about it is I think the investors made it very clear that while there's lots of outside capital that can come to Africa, the base has to start. Africans need to be prepared to invest in African companies. So if we're not prepared to invest, why would an outside investor come? And it's a more stable form of investment. So we need to do things like mobilize our own capital. If you look in the Nigerian context, we have, I think, about 7 trillion naira now in the pension, the PFA system. A lot of that is being invested in government, or the majority in government securities. We need to now start to mobilize in the private sector, and once we do that, we'll catalyze other foreign investors to come in and augment that.
Well, Nevin, when you look at a very surprising slump in the economic growth of a country like South Africa over the last 48 hours, 3.2% pullback, or what you call a contraction, in Q1 against a growth of 1.4%. How does this hit you? How does this hit you, Nevin, considering the size and the impact of South Africa as one of the leading lights of economies in sub-Saharan Africa?
Well, I hope this really sends a strong signal to all of South Africa and to President Ramaphosa. I mean, we all know the history here under the Zuma era. A lot of difficulties in the economy in South Africa. It's really hit a kind of crescendo when you look at some of the state-owned enterprises now, like Eskom or SAA or Transnet. So President Ramaphosa has his work cut out for him. I think the question that the international community has is he prepared to kind of make some bold structural decisions? Now, in announcing his cabinet, it wasn't evident that he did that. And of course, the speculation, the press speculation from outside it says that he's not prepared to stand up to the other factions in the ANC. We'll see, but I mean, this is a very negative economic signal. But it shouldn't stop us, certainly in Nigeria and other parts of sub-Saharan Africa, from doing what we need to do to attract capital and keep investing. But it is a bit of a drag. As your previous speaker was discussing, it means some South African companies are going to feel like they don't have the capital to invest in the rest of Africa, even though the rest of Africa is where the growth is.
You chaired a panel on technology, and of course the talk had always been, how do we get Africa to ramp up on technological penetration to fast track industrialization, whether it's the third industrial revolution or the fourth one, and contribute to trade as well as financial services industry. What are your takes? What's the take from your panelists on how Africa should go about this? Who is investing in it, and how much opportunities are still out there for the continent?
Well, I had a fantastic panel. I had 5 panelists, 4 women, 1 man from all over Africa. I think 3 of them had started their own company. We had the head of Google in West Africa, fantastic Juliet, on the panel. It was very informative, but a couple of key takeaways. The first one is there's so much innovation going on in the private sector. People are doing things with AI, artificial intelligence, with Internet of Things, with blockchain, obviously financial services and fintech. We need the governments to back this innovation and to be faster to catch up to it, because one thing that's holding us back is that sometimes the government regulation, they're just not prepared for all of this change. So in some cases it's working, in other cases the government is impeding it. The other thing the panel said, I think, that was very interesting is the governments need to, as part of this regulation, not be so concerned about necessarily having their own regulations. So one of the panelists started a company in the medical area, MedTech, and she was talking about the fact that if you have a medical device, you get approval in Kenya, you then need to get the approval in Uganda, you then need the approval in Rwanda, and all of this takes time, drives up the cost. Why can't we have a little bit like any sort of trade agreement, more common standards for bringing technology, bringing in new things into countries, so a country doesn't have to have the whole infrastructure for deciding it. So those were a couple of the takeaways. But the other thing the panel said, though, is, I mean, Africa, we have no choice. If you look at the number of people we're going to have in 2050, we have no way of delivering health care, we have no way of delivering education, we have no way of delivering services in the way that developed countries did it when they had much smaller populations. We need to leapfrog to these technologies. The other thing that was interesting about the panel is a lot of time with technology in Africa, we talk about fintech and we talk about the M-Pesa story. And not that that's easy, but it's relatively simpler with fintech because it is really truly electronic. Well, we had the panelists who were in ag tech, med tech, someone was doing logistics, where you have to combine the physical world with the digital world, and that's a real challenge. But Africans are figuring it out. So, but as I said, I think the biggest issue is the private sector innovation is running ahead of the government regulation, the government support. I don't mean financial support, but regulatory, kind of moral support on that. So government should be backing this, because this is how they're going to deliver things. This is not necessarily the government delivering, but the private sector is going to deliver things using these innovations. But it was a very inspiring panel, fantastic, 5 African young people that are doing incredible things.
Okay, let's spare some thought about a minute or two, Nevin, about the new story around Africa, which is the AFCFTA. What optimisms are there what's the global view about this new inter-Africa partnership agreement that is taking off? What optimisms are there? What are you hearing about how we should go about this?
Well, in our session over the last couple of days, we had Dr. Benedict Arama, the president of Afro-Exim Bank, speak about this, and he was so eloquent on it and addressed a lot of the issues that people raised. But some basic points. One is Africans can only be prosperous if we trade and invest with Africans. There's no way, when we're 2 billion people, that we can sell raw materials to China, to the United States, to Europe, and be prosperous. So this is a necessary step forward for us to have greater economic integration. And then people raise, all of the objections about various things, but Dr. Arama was very clear about it. I mean, there is the technical work going on with the AFCFTA, which is around rules of origin, what do we actually mean with free trade, with investment. But also critical to it is the need for us to, again, embrace some technologies, because one of the biggest worries about this is someone says, okay, a product gets done from Europe into Cote d'Ivoire, and then it then gets resold in Nigeria. How do we prevent that? The only way we're going to prevent that and really follow the rules of origin is technology changes like blockchain that can trace, you have the traceability of the whole supply chain. So if we're going to make AFCFTA work, we need to embrace those types of technologies. But I mean, I think the other thing that Dr. Arama said, which is very critical, is one of the big impediments to Africa trade investment is the reliance on the US dollar. So you have, again, in West Africa, we have Ivory Coast, Cote d'Ivoire trading with Ghana. They're not using the CFA or the SETI. They're using a third currency. That's very expensive. So the Afro-Exim Bank is actually driving a lot of the innovation to help make it easier. They're creating payment systems that can use the native currency. They're creating platforms so that companies in all parts of the continent can display what they do and start to trade with each other. So I think this drive, I mean, the AFCFTA, we're in an era where people seem a little bit negative and the problems with Brexit, but I mean, Pan-Africanism is really getting stronger and stronger. And I think there are a lot of political leaders and certainly business leaders that recognize that we need this integration. So I think it's an incredible success story for over the last 18 months with where we've got to with AFCFTA. And a lot of people are behind it. As I said, Afro-Exim Bank, the African Union, Dr. Paul Kagame, the president of Rwanda, has driven a lot of it. So I think it's got a lot of momentum, and I didn't hear anything negative about it. And again, you go back to the president of Togo. I mean, obviously, if you're sitting there in a situation with Togo needs this integration to be able to build what it's good at and distribute it throughout West Africa, or maybe even further to all of Africa. And then sometimes I know in Nigeria we worry, but I think we're going to be beneficiaries too. We need to be trading more and more with Africans. We have the capability to be a manufacturing hub for many, many things. So there was a very positive feeling about this particular part of the economic policy.
Thank you so much, Andrew, Nevin. A final one in 30 seconds. I'm not sure you spent 2 days or 3 days in London at such a conference without folks asking specific questions about Nigeria, where you came from. So what are they asking about us, where the country is going, about the economy, President Buhari's second term in office?
Well, I think people have recognized just in the official numbers we've lagged the last few years, and it's been difficult for us, that we have the potential to have a much greater inclusive growth. I think the question that people are asking is, are we going to start to see some decision-making, some structural approaches from the second administration? It's easier the second time. You don't have to get reelected. So people are waiting for a signal from the new Buhari administration and on how fast we're going to tackle our economic challenges.
Andrew Nevin, the Chief Economist and Partner at PwC Nigeria. Thank you very much, and very safe trip back here to Lagos. We appreciate that. So let's give you some of the stories making the headlines. Nigerian markets officially back in business today. The doors are open. We're just about 10:37 here in the city. So it looks like where everyone is back in business. But we're just left with 2 days for the market week. So it's going to be a very interesting how investors and traders will treat. It was a very bit of a lackluster Monday, overshadowed by the 2-day midweek holiday. So you expect the markets to open up a little bit sluggish or quiet today. When we get to that within the next couple of minutes, we'll talk about that for everyone. But of course, one other big story that we're following for you this morning is the Department of Petroleum Resources making a public announcement in one of the Nigerian dailies saying 5 OML and OPL licenses have been revoked because of legacy debts owed the Nigerian government. The 5 oil firms whose licenses have been revoked is Pan Ocean Oil Corporation, OML 98, Allied Energy Resources Nigeria, OML 120 and 121, Express Petroleum and Gas Company, OML 108, Cavendish Petroleum Nigeria, OML 110, and Summit Oil International, operating prospecting license 206. According to the newspaper Advertorial, according to the DPR, this was in line with the presidential directive that the government wants all those owing the government to pay back on those monies. That's some big story this morning. Meantime, Nigeria is still pursuing a plan for a national shipping company. The Master Director General, Dakuku Peterside, says the country will have a new national oil line, which will be 49% owned by technical partners, 51% by local investors. Peterside says the national fleet is part of the country's new strategic direction on the blue economy, which is designed to tap its maritime potential. In particular, Nigeria paying millions of dollars every year to foreign companies, shipping its oil to foreign refineries and shipping them back here. And this is plugging one of those holes. Nigeria working on a new national shipping line, just as we're also trying to get Air Nigeria back, according to recent news. So let's put all this together and get back. So U.S. President Donald Trump is now in the UK, is left to London. So what's the market looking like after his departure? And of course, another big story is one of the world's largest automakers, Ford, out of the US, says it will be closing its engine facility in Wales. What does it mean for the British car industry? We're putting all of this together for Simon Pusey, who is our business correspondent in London studios. Simon, good morning. Give us a few minutes to chew this over regarding this President Trump's departure out of the UK and what that means for the market. How's the market starting this morning? We see the FTSE 100 looking green as we speak with the rest of the European markets. Today, of course, another big day for the ECB with the meeting with the President Mario Draghi. Simon, good morning. I'm sure you're ready. So let's start with President Trump.
Good morning, Bosun. Yes.
Yes.
Yeah, so let's talk about the FTSE 100 first. It's up 39 points this morning. That's up just 0.5%, as you were mentioning there. It's as investors bet that central banks would take action this year to head off a global recession. We've been talking about the Trump effect and obviously the fact that Donald Trump has been having a few spats in terms of Mexico and China and most recently India in terms of trade wars and various threats about tariffs. Well, that has been putting the wind up a lot of investors and really worrying them in terms of what could be around the corner in terms of a global recession. But the market's up today on the hopes from investors that central banks would take action this year to head that off. The FTSE 250 is also up very slightly by 0.2% this morning. Some company news from that index, which is quite interesting. Go Ahead Group, which is a bus operator here in the UK, they have said that their internal buses division, they're going to invest in that, sending its shares up by 10.5% today. today. That's put them on course for their best day since September of last year. Also doing well is the Entertainment One Group. This is a Canadian-based group that's listed on the London Stock Exchange. It's behind the massive franchise that is Peppa Pig. I'm sure you're well aware of that, Bosun. Well, they're up 15% today. It's after their shares plunged yesterday on news that their president, Mark Gordon, could leave the company. Well, its shares are on track for their best day in more than 3.5 years after they denied that that was the case. So far today, markets here looking good, although the pound is down very slightly. Interesting news on sterling. A poll of foreign exchange strategists today shows that many would expect the pound to fall to equal value against the euro and even the US dollar. That's in the event of a no-deal Brexit. That would represent a historic low for the currency if that were to happen. So that's a poll out in the last few hours.
Yes, thank you so much, Simon. Let's talk about the Ford pulling out of Wales, this agent factory, on our afternoon show, 1:30 past lunchtime. So have a nice lunch and get back together into the studios at 1:30 to talk about that and other stories as we have today's trading day out of the UK. We'll take a break. We're right back.